Very good afternoon, ladies and gentlemen. Welcome to this week's weekly market review for the week of the 28th of August. My name is Benjamin Gold, here of Research and Investor Education here at SIAS. With me is, of course, our Senior Technical Analyst, Sunny. So we'll be going through a couple of big ticket items in this week's update. Before that, of course, the most important slide is the disclaimer. As you know, SIAS is a registered charity. We're not licensed by MES, so whatever that we talk about today, especially for specific companies or stocks, cannot be misconstrued as a recommendation. Do see a licensed financial professional before taking any kind of action in the capital markets. Again, some public announcements. The next SIAS session is on the 13th of September evening on a Wednesday. This is exclusive to SIAS members, so do use the QR code to chope your seats. Do give us a 5-star review on Google because we love you. Hopefully you reciprocate the love and love us. If you don't, of course, do go ahead and give us a 1-star review. Then we will blacklist you. No, not really. If you're not an SIAS member already, you might want to consider joining up. This is a going for $1 per month, which is $12 per year, which is a ridiculously cheap price, about the same as a Burger King upsize meal. I kid you not, you can go and check it out. So this is very verifiable. But you have 12 months of membership, which will, I think the main highlight is to grant you access to the SIAS session where you can ask our analysts any questions that you may have about capital markets. So do use the QR code to sign up. Now, a couple of things I want to cover. August has always traditionally been a bad month for the STI index. I'm not sure whether it's got anything to do with the public holiday and the NDP. But if you look at historically speaking, for the last 20 years, August has had an average return of minus 3.1%. So August has, usually not been a good month. All right, and that happens 4 out of 5 times. You can see it quite clearly in this chart here. Let me try to point it out to you over here. All right, so August minus 3.1%. That's the average return for the month, and this happened 20% of the time. That means 4 out of 5 times it loses money, and also only 1 out of 5 times it makes money. Okay, so the numbers that you have here, 20%, 63, 47, 75. This is the probability or the historical ratio of up months versus down months. And of course, if you look at it historically speaking, March, April, and July are the strongest months in the year for the STI index for the last 20 years. July especially so, up about an average of 2.6%. So the message I'm trying to put forward too is that don't think that August being a down month signifies any kind of structural issue with the STI index. Not really so. And again, you can also see that from the technicals. So Sunny has been doing the weekly technical analysis for the STI index. So it does look as though we have burst a couple of support levels, but there's still other support levels that will hopefully support the STI index. All right, but after August, then September generally is a bit flat. Right, and then as we head into the fourth quarter, November and December are generally good months. Now, this is not exactly a mirror image as to what happens in the S&P 500, but very close to it as well. So August, again, is also not a great month for the S&P 500. So take that with a grain of salt. So whatever kind of profit taking or the downtrend in the Singapore as well as the US market, don't panic over that. What you should do is, of course, panic over the Chinese and the Hong Kong market. So the Hang Seng Index officially entered the bear market last week, Friday, not this week, last week, Friday. This week, the Hong Kong, the Hang Seng Index basically was about flat. I think it was up about 0.05% or something, nothing much. So it's still in the bear territory. All right, so the Hong Kong as well as the Chinese market have got structural issues because of the risk factors as manifested by Country Garden, China Evergrande, as well as Zhongrong, so on and so forth. So that's a different kettle of fish, right? So STI, it's business as usual, I think. Now let's talk about the AI craze in the US. So if you have not heard already, NVIDIA has had a blowout fiscal year second quarter performance. Not only did it far surpass its historical norm year on year, but also versus consensus estimate. So revenue came in at $13.51 billion versus 1 year ago, which was $6.7 billion, which is double, and versus the consensus estimate of 11.04. So basically beat the estimates very handedly. Of course, Wall Street went berserk. After hours trading, Nvidia stock price went up as much as 9% after market hours, sorry, trading. And really the back of the block performance was driven by the AI server slash data center revenue. So they did make, or rather they did progress as well in terms of gaming, so on and so forth, but really was driven by the enterprise hardware businesses that they have. So if you do not already know, NVIDIA is the market leader for hardware to drive AI applications. The latest or the most current enterprise chip that they have is called the H100, right? So they have a server driven by H100 chips that they designed, manufactured by TSMC. This current server that they have can apparently train a ChatGPT type of large language model in 11 minutes. Let's put this in perspective. If you're using a normal laptop that your office gave you, you want to train something like ChatGPT, it'll take you years. Yeah, this server can do it in 11 minutes. So you can see, right, this is definitely far and away the market leader. No other company on this little planet called Earth can do this, right? They have also announced the replacement of the H100, which is called the GH200. Now, this is couched as a super chip because the H100 server is a mixture of Intel Xeon CPUs plus NVIDIA Meet H100 GPUs packaged together. But the new GH200 server, which will be, I mean, they've already announced it, but which will be delivered and launched in 2024, early 2024, is going to be 100%, it's going to be composed of 100% NVIDIA designed CPUs plus GPUs. So it's like an all-in NVIDIA solution. And that one is projected to, of course, train the ChatGPT LLM even faster. Right, so certainly this is far and away very much better than the PlayStation 5 that you have. Okay, needless to say, year to date, NVIDIA stock price has went up by about 200%, or actually more than 200%. I think it was 220%. So the question is, this is great for NVIDIA, obviously a well-run company. The PE ratio is more than 100 times, so people are going berserk over this. But does this translate into a different narrative for the entire semicon industry? So what we have here is basically the Philadelphia Stock Exchange Semicon Index, the blue color line, and the bottom one is basically the NVIDIA price. Okay, so we're looking at since August 2018 to now August 2023, so about 5 years. As you can see, the recent developments in NVIDIA stock price didn't really move the needle for the semicon index, actually. So which gives the impression that whatever the NVIDIA has done is really very specific to NVIDIA. So investors love NVIDIA, they love the technology, the market position, so on and so forth. But the semicon industry as a whole does not really have that kind of progress or the investor sentiment or investor love, right? So as of last night, the semicon index is down 9.85% from its most recent high. Okay. Now, so what has been happening to NVIDIA as well as the semicon index? This is the classic sell on news, right? So people obviously beat up the price for NVIDIA and the semicon index when the news broke. After that, there's been quite a fair bit of profit taking, right? So sell on news. Right, so NVIDIA itself is an anomaly, doesn't represent the fortunes of the other component stocks of the semicon index. But of course, NVIDIA stands apart. It really is the market leader, and I love this stock, and I've been talking about this stock for a long time. So even at the recent Invest Fair, I was telling people NVIDIA, TSMC, right? Well, anyway. So now, but if you look at the technicals, and maybe Sunny can chip in a little bit here, the semicon index here looks as though it's got a bullish ascending triangle, right?
Yeah, it looks to me it's an ascending triangle. But then I want to take note, yesterday after the announcement, the results or the earnings was released, Nvidia actually have a little bit spike up, so I thought all was positive. But towards the closing side, it was up 0.1%, I think. So it was almost flat like that on the closing part. So I am still I see it as an opportunity, because the spike up definitely reflects the earnings that came out. What's the potential going forward? So so in that sense, the closing that was flat was probably maybe another opportunity for me at least to get back in, or for investors interested in the AI tech boom. Nvidia, which is the chip powering everything behind all this, will be the key stock to look at, and that could mean that the triangle could have a chance of breaking out, or the support right now below it could be time to accumulate.
Mm. Uh, the one thing that the triangle, you see that how the bullish triangle works, right? Is that
Yep.
you're going to start from here, right? Normally,
Yep.
the breakout should happen before the last one third, which is kind of here.
Okay.
That wasn't a breakout, right?
Hmm.
So that's the only thing I'm kind of worried about this pattern, right?
Hmm.
So the
Hmm.
breakout, upside breakout for ascending triangle should happen before the last one third, before you get to the apex here. It's very close already. So I don't know whether it's going to happen or not. It looks as though it may not happen.
Yes,
That's the only thing.
that's usually the case. You are spot on right there. So don't usually happen towards the end, towards where the intersection is. And I
Mm,
think that also reflects that currently the market right now, we have the Jackson Hole Symposium going on tonight, and Jerome Powell will have a speech which will give a bit more clarity. And we have seen the latest news coming out, at least flashing on my Bloomberg platform right now. It's saying that some Fed officials say that we are close to the terminal rate, but we are not there yet. So something of a very gray kind of statement. So market is still
mm,
undecided yet at this moment. That could be one of the reasons why we are dragging it to the tail end of this triangle before we
yeah,
confirm that breakout. So that's my that's my reading of it as of what we have right now.
yeah. So this pattern we leave on a cliffhanger. You don't
Yes.
know until the end.
Mm.
Hmm, okay, good. Moving on. So a little bit about something here. Just want to kind of random thoughts that I had, right? Because at SIAS we always have got questions about whether stock A is good, stock B is good, and at the back of my mind, I'm always thinking, why pick specific stock when actually you can buy the market? So I want to bring in an example here, right? And the reason I'm bringing this in is because this is actually part, or rather, this is my SRS portfolio. Okay, I'm not going to tell you how much I actually invested, but we're just going to look at the returns. Okay, SRS, your supplementary retirement scheme. So as you know, you can invest in the stock market using cash, your CPF investment scheme, your SRS, right? So since 2017, I've been putting in money into my SRS, and of course, you don't keep cash; you just use your SRS to buy certain products. It is quite a limited range, but because SRS has got tax benefits, if you invest for a long time, at the end there's some tax benefits, which is quite attractive, depending on how much you've invested. So that's why I started doing that rather, but I still have my CPF investment scheme and cash lah. So that one is more like more speculative, but SRS is really for retirement. So I want to bring this up, right? So in under SRS, I can't buy the S&P 500 index or the ETF, but the next best thing is, of course, and I'm not recommending this because I'm not a we don't do recommendation. So what I did was basically use the SRS to invest in this OCBC S&P 500 index fund. Okay, so I think it's called the Infinity 500 or something, but can get from OCBC. So it's the S&P 500 index fund. Why index fund? Because I wanted this is the next best thing lah. Because SRS cannot be used to buy the S&P 500 ETF, but it can be used to buy an S&P 500 index fund, and only OCBC offers this. Okay, so what I'm doing here is basically to compare the returns for the fund that I invested. The first line here, number one, OCBC index fund. This is the one. And I want to compare it versus, let's say, the SCI index. Let's say number five. I want to compare number one to number five. So you see, in the time range was from November 2017 onwards. And why? Because it is fairly arbitrary. Why? Because I've started investing in the SRS since November 2017. So this is specific to me, right? But the thing is, if you compare the performance since November 2017 until a few days ago, 22nd August, you can see that the annualized return for the S&P 500 index fund is 10.15% over here. And this is all in total return. That means it includes whatever dividends has been paid out. versus the STI index, which is at 2.97%, again, all in, including dividends. This is on an annualized basis. That means every year, every calendar year since November 2017, this product has increased my SRS account by 10.15%. And if I put the same amount into the STI index, or let's say the DBS STI ETF, or rather the STI ETF run by DBS Asset Management, it would have given me 2.43%. So we compare apple to apple. The OCBC S&P 500 Index Fund is a real product, okay? Gives me 10.15% per year, all in. The STI ETF run by DBS Asset Management would have given me 2.43% per year, all in, since November 2017. Yeah. So if you think about it, firstly is so what I'm trying to say is, you know, there are different ways to skin a cat. So some people might want to talk about AEM good or not, venture good or not. How about top glove, you know? Okay, so my technique is like, you know, I really don't want to deal with all these details because I want to spend more time on my family, on Netflix, so on and so forth. So I just buy the market. So the only question that I have is which market is good? Is SCI going to outperform the S&P 500? Is S&P 500 going to outperform Hang Seng? Is Hang Seng going to outperform the Nikkei, whatever? So I settle on the S&P 500, and you look, since November 2017, and this includes the pandemic. You see this drop here is because of the pandemic. All in, it's up 75% rate. The total return here is 75.25%. And this is low because at one point it was up 100%. See over here. Just for a few days, for a few years of autopilot. That means I don't have to care about it, put the money there, it rolls over every month, I put in more money, invest, I have got another about 13 to 14 years before retirement. This would be quite sweet. After I retire, I take everything out and I go to Marina Bay Sands and bet on black. No, not really. My wife would kill me. Right. But I guess this is the power of long-term investing. So for those of you who are out there who are worried about which stock to buy, why don't you just buy the market? Find a good market that you're happy with. And of course, you can try to squeeze out a little bit more returns. If you use your SRS, you got tax benefits, right? If not, you can just use cash and so forth. You don't really have to try and figure out which is the next, NVIDIA or the next Tesla. You just buy the market. Okay, that's one idea. Yeah. Okay. So I'm going to leave that there. Now, the last slide is a public announcement, simply that I will not be around for the next 4 months until January. So I have married a billionaire. I'm going to be on my Caribbean, island, private Caribbean island, doing my reno. There's a lot of work doing reno. And this is the time when Sunny's going to come in, slap my face, and tell me to wake up. So
this wasn't in the script, They didn't tell me this, So I will not be seeing you again.
So I will be not around. Sunny is going to be doing this, plus a new joiner to the organization. I should be back by next year, simply because I've, if you don't already know, I'm actually a professor in the university. So my teaching responsibilities have increased quite a fair bit, or will increase quite a fair bit for the next term. And hence, I'm going to leave SIAS in the good hands of Sunny. But again, Sunny is of course younger and better looking than I am, so you'll be in definitely very good hands. So this is the last weekly market review I'm gonna do. But rest assured, Sunny is a good guy and he'll take care of you.
I think our members and viewers believe your first part of the story more, where you married some billionaire, rather than the second part of the story. So I think I'll grab all my chance to pull you back to ask you a lot of questions from time to time. And of course, what Benjamin shared earlier, the S&P 500, just buy the market, right? On top of that, why not, if you add a bit of spice to it, add a bit of Tabasco to it, why not look at the NASDAQ Composite Index as well, NASDAQ ETF? And of course, if you want to add your mala in, which is what Ben always say, which I will miss some of his jokes, then why not look at some of the leverage ETF? How much leverage? I don't know. You go and find out, or you can ask me on SIAS when I see you in September. Okay, so I will proceed to share my screen. I will thank Ben. And one thing I want to add, I think why Ben showed you his, although he did not say how much is the CPF investment, just show you the returns over time. I can tell you Ben buy his property with cash. That's why his CPF is papa one, you see. Not like me, I have to use my CPF to pay my property. So my CPF is kosong. Every month I need to top up. So that's the reason why he's showing you the CPF returns. Okay, I need to share my screen now. Okay. Okay, so I will start with the usual. So economic data as we are speaking right now, the Jackson Hole Symposium is underway. And tonight, Jerome Powell will be speaking at the conference or the symposium, and that would mean that we may get some updates. Initial news that came out on this Friday that we are on the Friday that we are doing this on 25th August is that some Fed officials says that we are close to the peak terminal rate, but not there yet, meaning there might be a few more rate hike to go. So the narrative have not really changed much. Put it in layman terms, 有讲等于没有讲 got say, like no say like that as of now. Okay, so this is at about 7:20 Friday. Okay, so that's the latest thing that we have. Going forward, what we see is next Thursday, we see that there's a core PC price index coming up, which may shift the needle a little bit on the probability of the rate hike, as well as the personal income and personal spending. But I think 1st September will be the key day to look at because that is the day where we have our presidential election. So please vote carefully, have spent some thought about that. But on top of that, in the evening, we will also see the non-farm payroll coming out, unemployment rate coming out, which I believe will have a very big impact on how the Fed will decide on the next interest rate meetings. Okay, so earnings calendar. Ben talked about the NVIDIA earning just now, so I will not elaborate further, just to tell you the numbers or the figures over here. Earning per share coming at $2.70. Consensus was $2.07 only. So how much was the above expectation kind of surprise? You calculate the percentage over there compared to the previous EPS of just 26 cents. Revenue came in at about 13.5 billion, which is like 2.5 billion above the forecast, and much higher than the previous revenue reading at 6.7 billion also. So that explains why the spike up when the earnings report was produced or released, but then it closed flat. So I see that as of now as the opportunity, but of course, like I mentioned earlier, the speech that will be made tonight as well as next Friday will sway the market quite a bit. So if you are able to bite through this volatility, NVIDIA can be one of the stocks that you might want to look at. So maybe later on, when I look at the NASDAQ Composite Index, which NVIDIA has a big chunk of it inside there, or is a big constituent inside the NASDAQ Composite Index, you can have a few of it of how the tech sector is performing right now based on the tech-heavy NASDAQ Composite Index. So the CME Fed Watch Tool, which measures the probability of the Fed interest rate increase. So the next meeting, 20th of September, still quite some time away. So a lot of things can happen. Like I said earlier, tonight, Jackson Hole, while Jerome Powell's speech. Of course, next Friday, 1st September, the unemployment rate or the non-farm payroll data might sway the probabilities very much or in a very big way again. So current reading now on Friday, 25th August, is about 80% kind of a probability that we will have an unchanged kind of a situation. So we will leave the interest rate at 5.5%. But as you can see over here, over the past 1 week or so, the probability that we will see a 25 basis point hike to the interest rate to bring it to 5.75% has increased from about 11% to 19%. So this is something to take note of. And I believe this is not a truly very accurate picture right now because we are still some time away, and there's still quite a bit of economic data to come out before 20th September, where we may have a clearer reading on the probability as well. Okay, so I'll look at the technicals now. On the index, I will do a reverse instead of starting with the US index. Usually, I will start with the Asia index first and the STI index for our local market first. So STI on Friday closed at about 3,189 points, up 9 points, or about 0.29%, which is a completely different picture from what you see on Thursday night close of the US indices, which was closed. All three major US index closed more than 1% down. So what does this mean for the STI? So you can see that the STI index, previously we have a very aggressive uptrend that was connecting the low of October as well as March this year. And that was broken through somewhere in the middle of August. Now we are approaching towards the end of August already. And the last few trading sessions, we have a bit of a bounce over here. And why is the bounce happening over here? So in the previous weekly market review, I do note some points that if the market is to cross below this intersection point over here, Then the next support level will come in around the July low, which is around the 10th of July, and that is around the 3,128 points level. Now, if you connect this low in July as well as the low in March this year, you have a rather gentle or close to horizontal kind of a trajectory, although it still have a slight uptrend, and that is why that may be why explaining that there's a bounce in the recent few trading days, okay, on this week. So this is the where technical traders may be looking at that this is the support level, at least on the short term, because we are connecting the March and the July low. So it's providing some kind of short-term support, but we are going into some sort of an ascending triangle again, or sort of a neutral triangle, symmetrical triangle, I would say. So this would be squeezed around this region over here. And I believe we may have a breakout above this resistance level that you see connecting the high, the year-to-date high in January, as well as the high in April, which was tested in June. Why do I say so? Because the technical indicators, as you can see, the MACD indicator for the past few trading sessions has been showing that the negative momentum or the downtrend momentum has been subsiding. The MACD line is converging towards the signal line, thereby meaning that the worst of the correction or the pullback since the end of July or the beginning of March may be over. The worst might be over, and it may be time to start to accumulate along this level. Not saying that it will break out now, but it could be time to accumulate. On the RSI side, you can see that the lowest reading that we have was about 29.39, which is like 1 point below the 30 point oversold trigger. So thereby it has a bounce when it touched the 29 point level on 21st August. And now we are on an uptrend already, okay? So this is a signal to us that, this is another signal to us that the worst for the STI index in the near term might be over and it's time to accumulate again. Now, if let's say we were to accumulate around this area, what we have today around the 3155 or the 3189 level, where should the next target be? Of course, we have one of the target over here, 19th of June. Okay, that is around the high will be around the 3257. Of course, this now also coincides very close. I'll just draw the horizontal line to be much clearer. Okay, horizontal line. Okay, horizontal line in red over here, which is at 3277. So this may find some kind of confluence near the 20 days moving average, which is 3260, which is the 20 days moving average. And if we are able to test or close above this, this could mean a resumption or the end of the downtrend that we see in August. And of course, this will be the first target that STI will be looking at, 3277, 3260 region. And of course, if we go above that, then we may test the April high, which is around, let me put the horizontal line in as well, which is around the 3,331 points level. So near term wise, I would say support is coming in at 3150, 3155, and we are looking at the target of 3260 as the first target. And on the higher side, I'm looking at the April high of 3,300 points to take some profit off the near term if I were to get in here next week. Okay, so this is the close of STI on 25th August, Friday. Let us look at the Hang Seng Index, which is the gateway into China. So as Ben have mentioned, Hang Seng Index is in correction territory right now. It has reached below more than 20% since the year-to-date high, the recent peak that we saw in January. So is it a good time, or how do I look at the Hang Seng Index going forward? So I have been talking, talking about the Hang Seng Index every week on the weekly market review. I said that this is where I get in March the low. It goes back up, but did not hit the year-to-date high. I did not exit. Hit this level, market came back down, which there's a signal over here, this candle over here, which I may have missed because there was a big kind of a shadow or a candle tick above, which signals that there are a lot of sellers around this region. So market went down again. So around this region, I mean, not around this region that I got in, but slightly higher, which was the green line, the same level which I got in March. I start to accumulate again over here. This was my second shot. And then after that, it tested this, it break out. I thought that, okay, this is it. And of course, some of the property news or the slowdown in China economy start to come in again. And my hope that it would reach the year-to-date high was again being pushed back again. Now we reached this low in the early part of July. Okay, so I got in again. That is my final bullet, I would say. Okay, so because for now, the recent few days low, I did not enter. So this was my final bullet. So my average price is around here between the 18,800 800 and the, sorry, not the 18,800, but the 18,200 points level, or to the 18,800 points level. If you average that out, that's around 18,500 points level. That is around where my entry is, okay, for that few position. So I'm still targeting, so I'm not that optimistic now year to date high, but then I'm still targeting the at least the April high over here, because that's where the higher bound of the Bollinger Band is right now, around the 20,600 or 20,800 points level. So recent few days, I see a bit of a bounce. So similar characteristic to the STI index. MACD starts to subside a bit. That means the downtrend momentum is over. So whatever bad news that's in the market right now about the property market, the slowdown in the Chinese market is already baked into the Hang Seng Index right now. That's what I'm seeing. So the RSI is also showing signs of a rebound. It reached a low of about 26 points on 21st August, and we are seeing a rebound now. So hopefully this also signals that the worst of the Hang Seng Index is over right now. So I'm targeting the 20,600 or 20,800 points level. Okay, depending on how it rebounds, then I would take sort of a measure the situation again when it closes that level, or even go above the 20 days moving average to see how it goes first from there. So as of now, I still think that the bottom is around here, 18,200. So you more or less have a double bottom here. If this one we manage to close above, maybe a triple bottom around the 18,200 level, which a triple bottom formation shows a very strong support, could be the bedrock for the rebound in the Hang Seng Index. Okay, so I'll go to the three major US indices now. So today is Friday, so we have the past 4 trading days. US market is not open yet as we do the recording today. So you can see that there was sort of a very big down red candle, which a very long tick at the top. This is, I will call it an engulfing red candle, which means that there is more downside to come for the Dow Jones Index at least, okay? So what this is telling us that the support level, or maybe this triple top that you see over here since January this year, is likely unable to hold, because that means that there is no change in polarity. It may continue to be a resistance level, and hence the next support that you'll be looking at would be this low over here in May, which is the 32,500 point level. Okay, so why is that? So why am I saying that this could be the support and the Dow Jones Index might be coming down further? Because if you look at the MACD indicator, not a very clear sign or not a trend forming that the downward pressure, the downward momentum is subsiding. MACD line and the signal line both looks to me that they are still trajecting downwards and not showing signs of converging yet. So that was reconfirmed by yesterday MACD histogram bar, which is an expansion of the downward momentum from Wednesday close. So the RSI index, as I said earlier in the previous series, has also not breached the 30-point oversold territory yet. So that means that there could be more downside selling pressure. And of course, momentum is weak right now because it's below the 50-point neutral mark. Thereby, a reversal of the Dow Jones Index is unlikely in the near term until it reaches a firmer footing around the 32,500 points level. Okay, next, let's move to the S&P 500. Same thing, Thursday, big red candle, engulfing red candle, which is a very bearish signal if you just read the candlestick by itself. So we have also breached a short-term uptrend line. We are now looking at where is the next support level. So the next support level will likely be here, which is the red line over here, 4,195 points or 4,200 points. So this is where the next firm support will be, which is a triple top resistance level previously. So might have a change in polarity and may have find a sort of a confluence with this green line that you see over here, which is the long-term uptrend line connecting the low of the S&P 500 during the low of October last year as well as the low of March this year. So this is the red line is where I'm looking at where a bounce might come in for the S&P 500. The MACD is telling us that the downward pressure is subsiding. Okay, as you can see, the MACD histogram is showing a weaker or is getting shorter and shorter. That means that it may be the momentum might be the negative momentum might be subsiding. But then this is one data point compared to what the candlestick is saying, comparing to what the RSI is saying. Index is still not oversold yet, and so we could say that it's a mixed signal, but a majority of the signal point to the S&P 500 that the downside is not over yet. So MACD is one data point, so we always look at a few technical indicators to make a better judgment of how is the index going to be like going forward. Next, the Nasdaq Composite Index, also a very big red candle. Where is it likely heading? It may be heading towards this uptrend line connecting the low of December as well as March this year, and this is where we are. So this green line, I will pull back over here, is the September high that we see last year. Okay, so or not really the September high, but the double bottom that we see in the early part of 2022 around the Feb and March period. So this is a support level. The green color line is a support level that we have observed in the year 2022. Okay, and just below this green color line, we have that double top or even a triple top. You would say that is around the 12,269 points. So anything below 12,500 is actually putting the Nasdaq Composite in a strong or a firmer support level to look at. So as of now, I'm not looking at Nasdaq Composite or going long at this point, but until it reach around this region between the green and the red line, which is below the 12,500 points, then yes, I'm looking at to go long again or add on to the Nasdaq Composite Index ETF and play the long-term game of what Ben mentioned just now. Just buy the market, just buy the tech-heavy market, which I'm still very optimistic in for the past few years, I would say. Okay. So MACD show that momentum is subsiding. RSI is not there yet. It's still reading at 42. Have not breached the 30-point oversold trigger yet. So that means that there may be still downside to come. So I'm not dipping my feet into the water right now for the US indices as a whole. So that's my take on this weekly market review on the indices. I will just want to let Ben have the last few minutes to say his goodbye to us for this moment until we see him back again here in the very near future.
I will be writing to you from my private Caribbean island. So don't worry about that. Yes, we do have internet connectivity using our private satellite phones. Yes, again, I'm dreaming. So it's been a pleasure working with you guys, especially Sunny and the support team. Rebecca and Janice are at the back here. They're very quiet, but they'll be integral to the weekly market review for eons. So hopefully I'll be back early next year, depending on how my teaching at the university goes. But it's been a pleasure, and hopefully we'll see each other again. So thank you very much. This is our, I guess, a wrap for our weekly market review. So have a good weekend.